Is there trouble in sunny San Diego? Are home prices dropping? What's happening in the housing market today? So we'll look at the reasons behind this. Is it because buyer demand is dropping, increased inventory, or is it those pesky mortgage rates? So we'll dive into that. And I study the housing market every day and all the data. So let's go figure this out together. Let's get started. So markets have been shifting across the US, and there are 6 major markets that have really seen price declines year over year, and they are concentrated in 3 states, which is Texas, Louisiana, and Florida. Hey, real quick, if you're new to my channel, welcome. I'm Jade, and I'm a full-time real estate agent here in San Diego, and I also make videos on the housing market and what's happening. And also, I create content for questions that a lot of my clients have been asking me. So if you have a question about your specific neighborhood or property, let me know. My number is right here on the screen. You can call, text, email me. I would love to hear from you. And okay, let's get back to the video. So if we look at this article from Fast Company, it says housing market shift, 6 major markets where home prices are actually falling. So if we go into the article, it says that among the nation's 50 largest metro areas housing markets, these 6 markets have seen outright year-over-year home price declines over the past 12 months. So these are New Orleans at 4%, Austin, San Antonio, Tampa, Florida, Jacksonville, and also Texas at 0.3% price decline year-over-year. Well, it also did mention in Southern California for year-over-year price gains that we have made those price increases year-over-year. But as far as the rest of the year is concerned, we're done. So it just says that right here. Southern California, year-over-year, are pretty much done posting gains for 2024. Looking closer to home here in San Diego, there has been a decrease in housing prices. So there has been a 9% decrease in home prices in the median home price year over year, and that has brought it down to $999,000 as of last month. And it says here in a Fox article, San Diego's housing inventory grows, prices drop significantly. So it says right here, out of Housing Overview, they based it on a report from Realtor.com. Housing Overview of nation's largest metros last month. The median sales price for homes in San Diego, Chula Vista, Carlsbad area was $999,000, a 9% decrease from the same time last year, according to Realtor.com. So according to Redfin, there has been an increase in inventory year on year. It has gone down slightly in the last few months, but compared to last year, there are more listings on the market. So as we can see here in the graph, normally, obviously, there's more listings that come up throughout the year with the high point in the summer, and then it goes down in the fall. But we are kind of holding steady. So right now, as of last week, October 13th, there were 554 new listings in San Diego County. And if you want to compare that to last year, see the blue line. So while we are decreasing, which is normal for this time of year, we are up 7.8% compared to last year. Last year at this time, there were 514, as opposed to now, which is 554. So diving deeper also into median sales price, and let's just look at that. So now looking at median sales price from Redfin, as you can see, there is a huge difference, a huge mountain. Here, the top price was in June, end of June was $942,000, the median sales price in San Diego County. And then it sharply dropped. And then it did increase in September, most likely because of the federal funds rate, dropped to its lowest in 2 years, especially from its high last October. So here in September, the median sales price was $902, but now it's still kind of sliding down. And right now, as of last week, we are at 884,000 for the median sales price. And if you want to compare that to last year, 2023. So as you see, the median sales price is 3% higher than last year. And last year at the same point in time, it was 861,000. So it's a difference of about 20,000 same time last year. And now as we move on to why these prices have been going down, well, a lot of that has to do with buyer demand. There is less buyer demand, and that's because of those pesky mortgage rates that just won't come down. They did come down just for a quick minute in September, but now they've gone up. And why are they going up? So if we look at this article from NPR, mortgage rates were supposed to come down. Instead, they're rising. So here's why. So as they say, basically the jobs report came out 2 weeks ago and it was better than expected. So they added more jobs to the market, 100,000 more jobs than expected. I made a video on that right here. And because the jobs report was better than expected and inflation has come down from its high point of 9%, and last month it came down to 2.4%, but it is still not the target of the 2%. So the economy is doing well. Inflation is still kind of hovering a little bit higher than the feds would like. And as you can see here in the article, you might expect that mortgage rates would be falling right now after the Federal Reserve cut interest rates by 0.5 point last month. Instead, mortgage rates jumped higher. The latest data from Freddie Mac showed the average 30-year fixed-rate mortgage had increased to 6.4%, more than 0.25 point higher than just 2 weeks ago. So as you can see here, we'll just take a look at the graph. So this is the week ending October 17th. As you see here, mortgage rates were at a high here of May, and they slowly dipped down all the way down to September, which was 6.08%. And now since then, in the last month or so, they have kind of crept back up. And right now we're at 6.44%, according to Freddie Mac. And this predicament of why mortgage rates are still becoming so sticky, you can see here from Fox Business why mortgage rates are going up despite the Fed's interest rate cut. So they said the same thing, that because the job market has been strong, the economy has been strong, the mortgage rates, they're just ticking back up to kind of make sure that inflation stays in check. So as I scroll down the article, it says from Hannah Jones, Senior Economic Research Analyst at Realtor.com, pointed that the most recent unemployment and inflation data, both coming in higher than expected, which put upward pressure on mortgage rates. So that's the reason for why mortgage rates have continued to go up. It goes on to say, like, experts are saying that mostly mortgage rates will go down eventually by the end of the year. There is another jobs report coming out this month, so we'll just have to see what's happening. But the mortgage rates are very volatile, so we'll just have to wait and see. And while mortgage rates are still ticking up and they're hovering around the 6.5%, there is some slightly good news, which is mortgage rates haven't dampened pending sales. So buyers are still out there purchasing properties and sellers are still listing their homes. So as you can see here in this Redfin article, rising mortgage rates haven't yet slowed pending sales. They're saying across the nation, there has been an increase in pending sales by 3.2% over the last 4 weeks. And out of 34 of the 50 most populous metros, a lot of them have been in California. So the biggest gains in pending home sales. Redfin's weekly housing data looking at pending sales. So here you can see that it has kind of evened out, even though that prices have gone down and mortgage rates have gone up. Pending home sales are evening out. Let me just increase this a little bit so we can see. So right now, there are 500 properties under contract. And if you want to compare that to last year, So there are more pending home sales this year than last year. So there's a 5% increase. Last year at this time, there was 475 properties under contract, whereas right now there was 500. And if you're wondering how many sellers have been reducing their prices once they've already put their house on the market, buyers are not taking the bait. And so here from Altos Research, and right now, the 7-day average is 31%. So out of every 100 sellers, 31 of them are reducing their price, which is pretty high. So as you can see here in April, it was only 22%, and it is definitely ticked up to 31%. So what does this all mean? Well, for buyers, this is really good news. They've got more an advantage now with more inventory, more properties on the market. So they've got more choice. And also this means more negotiating power. As we've said, that houses are sitting on the market longer, so they can negotiate. But also it seems like buyers are jumping in because there are more pending home sales than last year. But if you are waiting for rates to drop, they're probably not going to drop too much, not until next year, not until 2025. So you need to think about home prices are still increasing year on year. So take that into account. Obviously, look at your monthly mortgage payments and if you have an emergency fund. So just think about your unique situation and if it makes financial sense. And for sellers, you've got to be aware that your home is probably going to sit on the market a little bit longer. You're not going to get as many offers. And it's very crucial to price your house competitively, not over market rate, or else it's just going to sit on the market. Okay, well, if you enjoyed this video, I would love to hear from you. Reach out to me. My number is right here on the screen. If you have any questions about this video, or you're wondering about your specific neighborhood or property, what it's worth, reach out to me, as I said, or you can also book a Zoom call. My details are in the description below. Also, if you like this video, check out this one. And thank you for watching.